Welcome to Illuminati Silver. We tell you the truth about silver. Today is Tuesday the 29th of November 2016 and we're discussing the case for $10,000 gold. All of us have seen on the internet a number of gold and silver pumpers stating that gold is about to rise to $10,000 anytime soon. Some have said $5,000. And we have even seen one stating $50,000. Even some of our subscribers quote gold will reach $10,000 in 2017 or 2018. And we wondered, where have these figures emanated from, as our analysis based on fundamentals stressed that $2,000 gold would be quite an achievement at that time. Well, apart from those making outrageous claims like Bix Weir, who argues the case for $100,000 silver, yes, you've heard it correctly, $100,000 an ounce silver, with a set of conditions less likely to occur than someone winning the state lottery 3 times in a row, we have managed to identify the real advocate of this prediction, who happens to be a serious economist and financial commentator. Now, we are confident that most of our listeners have heard of him, and we have mentioned him in the past. His name is Jim Rickards, who has penned numerous New York Times bestsellers on the relationship between commodities and currencies. His latest book, The New Case for Gold, defends the rationale that gold always has been and always will be a true safe haven during volatile times. He therefore urges investors to think of the commodity as insurance, but not an investment. He frequently cites the financial meltdown of 2008, where US banks teetered on the brink of collapse before the government's multi-billion-dollar bailout. Before that, in 1998, Wall Street bailed out long-term capital management when it collapsed. Rickards explains that financial panic seems to occur every 10 years, and therefore investors should brace for another disaster in 2018. Yet this time round, Rickards believes that it's the US government itself that may trigger the next crisis. This is what he said recently on CNBC, quote, "We should expect the next global financial panic soon. We have imploded twice in the last 16 years, so get ready for the third one. In 2018, who's going to bail out the central banks? The bailout money is going to come from the IMF, the International Monetary Fund, as they have the only clean balance sheet left." Unquote. Rickards' argument is based upon the fact that in 1998 Wall Street bailed out long-term capital management. In 2008 the Fed bailed out the banks. During the next crash, only the IMF is large enough to bail out the central banks and governments. Rickards believes that this will drive gold higher to $10,000. He states, quote, "This sum is not a made-up number. It is the implied non-deflationary price." Unquote. Rickards points to M1, the base money supply printed by the Federal Reserve plus active checking accounts. The value of M1 is derived in large part from the value of gold and represents the day-to-day money supply that people can use to spend. He explains, quote, "Global M1 has about 40% gold backing. There's about 35,000 tons of official gold in the world. That comes out to about $10,000 an ounce to use gold to create confidence in the dollar. The dollar price of gold moves around, but gold itself stays constant." Unquote. Rickards' scenario, of course, is a hypothetical value based on a number of theoretical occurrences that would need to happen in the global economy. Much of it is based upon continuing global conflicts which may peak. For example, he quotes, "Look at the South China Sea. Look at the Middle East, Libya and Iran. The system is not stable, unquote. He also references that the Fed, over the next 12 months or so, will ease up on liquidity rather than the tightening markets are trying to predict, resulting in a weaker dollar and a higher price for gold. The last few days, Rickards has been interviewed a number of times, as he has yet another new book to promote. He believes that Trump will attempt to spend his way to economic growth, which could lead to inflation. He also highlights that if the IMF is eventually called in to rescue central banks, then the SDR, special drawing rights, which would be the currency the IMF would use to bail out individual countries, would have to instill confidence, and to do this will comprise of a certain percentage of gold, and this will ignite its price. So what do we make of this? Well, there are conflicting aspects. If the world moves towards a pure digital currency economy, then one has to ask, what is the place for gold, other than just its ornate beauty in jewellery and black market trade? Bitcoin, for example, is backed by nothing other than a limited number being available and the security of its operation. And so something similar could theoretically be created, or Bitcoin expanded on a total global scale without the need for gold. On the other hand, of course, to achieve such a digital currency that is global will take a number of years to implement, during which time many believe the financial crash will have already occurred, and there will be a flight to gold. Let us assume the latter scenario happens. The flight to gold will be a mixture of monies moving out of stock markets, possibly bonds and property, into precious metals. However, the currency markets will implode, and the value of the dollar will depreciate significantly, and of course the value of gold goes up in dollar terms. That said, and Rickards points this out, you could very well have $10,000 gold in that scenario. But rather than making you rich, that $10,000 will still only buy you the same as $1,000 will buy you today. So what gold will in effect achieve is that rather than make you wealthy, it will protect your purchasing power, while those who do not hold gold will be unable to do so. On that basis, this supports what we have said all along. Do not buy gold and silver in the belief that it will make you wealthy. Do so in that it will protect your purchasing power when others do not have that protection. Of course, should a financial crisis not occur, and the precious metals are not actively sought after, then a 5 to 10% holding of your assets in gold will not do you any significant harm. If, on the other hand, you believe the pumpers are right, and that Rickards' forecast and timing is correct, and you decide to go all in, then heed this caution. Your prosperity will then be dependent upon economic collapse, which will have a range of other unpleasant consequences. Or if there is no collapse, you may be holding on to it for many years to come. So be prepared in more ways than one. Having said that, we do see gold and silver providing a little more than just currency protection during the course of the next 20 years. At some stage, gold and silver will be seen as an attractive investment opportunity over and above just holding monetary value. The same will apply to houses, to stocks, to bonds, etc. Longer term, we foresee silver being not only in great demand, but more expensive to extract as the mines become deeper, thereby ensuring an attractive appreciation in price. However, we do not believe for a moment that by jumping in with both feet is sensible, unless, of course, you are an all-out gambler and can afford to do so. By the way, at the time of producing this video, gold currently stands at $1,184 and silver at $16.50 an ounce. We hope you have found this video interesting and informative, And if so, please give it a thumb up and share it on Twitter. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe as a free member for regular email updates and offers. Our Facebook page, which is updated daily, can be found at facebook.com/illuminatisilver. Disclaimer. Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.